Welcome to Tesla Daily. 1. Tesla has just launched a 7-seat Model Y in Europe, but there are some concerns about demand. Meanwhile, in China, Tesla's deliveries have dropped significantly, even as financing incentives get extended. 3. On a brighter note, demand for the Cybertruck is soaring, despite some production delays. Elon Musk has raised concerns about risks in expanding Giga Berlin, especially with ongoing union tensions. 5. In the Netherlands, Tesla's full self-driving approval could be just around the corner. 6. Over in Australia, Tesla's energy business is growing, with new Powerwall distribution. 7. However, Tesla's plans for a robo-taxi service are facing hurdles, mainly due to regulatory challenges. Let's dive into some recent Tesla news. First up, Tesla has launched a 7-seat option for the Model Y in Europe. It's a €2,500 add-on to the long-range all-wheel drive model. But here's the catch. Demand for the standard Model Y is looking shaky, especially with the larger Model YL gaining popularity in China. Now, the practicality of the 7-seat option is being questioned. Early reviews call the third row tiny, only really suitable for small kids. Meanwhile, the Model YL, with a more usable third row, accounted for nearly a third of Model Y sales in China last November. This launch seems like Tesla might be trying to clear out old inventory, rather than truly meeting consumer needs. Plus, the price bump from €52,990 to €55,490 for the premium long-range AWD could turn off buyers, especially those eyeing the more spacious Model YL. As Tesla gears up to launch the Model YL in Europe, this overlap could complicate sales for the 7-seat Model Y. Investors should keep an eye on how this plays out in a competitive market. Next, let's talk about Tesla's deliveries in China. They've taken a nosedive. Estimated delivery times for all models are down to just 1 to 3 weeks. That's a big drop, especially after a record month in December. In January, deliveries plummeted by 45% year-over-year, hitting just 18,485 units. That's the lowest since November 2022. Tesla's rolled out aggressive financing incentives, but competitors like BYD and Xiaomi are matching those offers, which dilutes Tesla's edge. As Giga Shanghai shifts to focus more on exports, there are real concerns about maintaining market share in China. Tesla needs to address this declining demand and rising competition to avoid losing ground. Now, on a brighter note, demand for the Cybertruck is surging, despite production delays. The new all-wheel drive trim is sold out through the end of 2026, with delivery dates pushed back to April 2027. This strong interest in the more affordable $59,990 variant shows consumers are still excited, even with production challenges. However, the delays raise questions about Tesla's production capabilities. Investors should be cautious. Success with new models like the Cybertruck is crucial for stock performance. Moving on, Elon Musk has raised concerns about the future of Giga Berlin's expansion. He warned that external influences, particularly from unions, could hinder operations. With union elections on the horizon, Musk's remarks highlight ongoing tensions in Germany. If the IG Metall union gains more power, it could lead to higher labor costs and operational restrictions. Investors should watch this closely, as it could impact Tesla's growth in Europe. Now, let's talk about Tesla's full self-driving technology. It might get regulatory approval in the Netherlands as soon as March 20th. If it goes through, this could be a game-changer for Tesla in Europe. The Netherlands could be the first to approve Tesla's FSD software, which relies on advanced AI. This could open up new revenue streams for the company. But navigating the regulatory landscape in Europe has been slow and challenging. Investors should keep an eye on this potential approval and its implications for Tesla's growth. Next, Tesla is expanding its energy business with a new distribution agreement for the Powerwall in Australia. Sales are set to begin in mid-March 2026. This move taps into Australia's growing demand for energy storage, especially with its strong rooftop solar market. The partnership with Supply Partners Group will make it easier for installers to offer the Powerwall. This expansion is a positive sign for Tesla's commitment to diversifying beyond automotive sales. Lastly, Tesla's robotaxi ambitions are facing hurdles. The company hasn't logged any autonomous test miles in California for 2025. This setback raises concerns about its plans for a commercial driverless service. With competitors like Waymo advancing, Tesla's stagnation could impact its market share and investor confidence. Ongoing legal challenges might also complicate securing necessary approvals. Tesla's challenges in the regulatory landscape are significant, and investors should be cautious as the company navigates these obstacles. That wraps up our Tesla update. Stay tuned for more developments. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a reminder, this is for informational purposes only, not financial advice. Catch you in the next update.